Hello, everybody, and welcome to 100-Year Real Estate Investor. We're your hosts, Jake and Gino, and this is the show dedicated to long-term personal financial engineering. Gino, how's it going?
Jake, I'm doing great, bro. How you doing?
Always making it happen, big man. Today, I want to discuss a sensitive topic, Mr. G-Dad.
Whew.
You want to know what that is?
I'm a sensitive guy, so let's go. Hit
me. So here's the deal. Owning versus renting on multiple levels, okay? It comes up all the time. It's a little, personal, financial thing that people just love to talk about. So I'll start with myself, all right? I like to own things, personally. I like to own precious metals. I own my house. I own some land. I own a ton of real estate. Besides that, multifamily apartments. And we own this stuff, right? I don't rent. I even own my cars. I know a lot of people are like, oh, do the lease and this, that, and the other thing. Look, it just works for me. I like buying this stuff. I like having no personal debt, and I like having long-term fixed rate debt on my multifamily assets. That's just me. I know everyone's got a different opinion on it, but there's some interesting stats to kind of show the difference in net worth for folks that actually own stuff for folks that do not. So there's a survey from the Federal Reserve, and this really shows how important the 100-year mindset is, the ability to look long-term, okay? Homeowners, okay, have 44 times more net worth than renters. That's staggering, okay? Median worth of the homeowner, $231,400, the renter, $5,200. And these are older numbers. This is the most recent survey that we found from the Fed. So that is very, very telling. I know there's your boy out there, Grant Cardone, was like famous for saying, you can't own a home. It's not an asset. Look, not going to go there, whatever the case may be. I think I just saw the guy just bought like this massive house. So look, we all can contradict ourselves, not even calling the guy out. But ultimately, we like to own things. There's a direct correlation to net worth and home ownership. And I think it's even bigger than that because we like multiple assets. We wrote the Honeybee. We like multiple streams of revenue. Show it up for the folks on YouTube out there.
Jake's got the little yellow
I got a little yellow one for the bee.
And the honeybee is important because it does allow you to think about creating multiple streams of revenue. It does allow you to create a business. It really encapsulates the 100-year mindset. For everybody listening to Jake and Gino, you're all entrepreneurs out there. You're all trying to build a business. You're all trying to create worth. I'm not here to tell you renting versus buying for your personal
preference. Just sharing with you. Exactly.
Yes. And I think renting is a tool in the toolbox, just like syndication, just like creative financing, just like owning. And it's an appropriate tool for whatever your situation you're going through. Let me give you a quick story, Jake. When I got married, my first home, I rented my mom's basement. She didn't pay any rent, but I lived downstairs for a year. While I built my home, I had a $20 cable bill back in the day. That's the only bill I had. She
wasn't letting you escape that sucker.
Every single nickel was going back into the house. So I built my first home with no mortgage. Then I had $1 million in equity in that home. I sold that home. I rolled it into my next purchase because then I built another house next to Mayapack. So my net worth was rather significant. Now, the net worth doesn't equate to cash flow, but at least I was net worth positive. I own that asset. That asset allowed me to actually borrow from my home equity line of credit, very similar to what we do with cash whole life policies, where you're borrowing from the cash value. I used the HELOC on my home to get into our third deal, which was completely revolutionary. If I was renting, I would have no equity in my homes and I wouldn't be able to borrow it. So for me, fast forward, I moved down to Florida. What did I do when I moved to Florida? I rented for the very first time in my life. I actually
had a toolbox, baby.
Yes, I rented for 8 months because I didn't know where I wanted to land. I wanted to make sure I was in the right neighborhood. I want to make sure that I came down here. I surveyed the land. I want to make a great deal. So for me, for 8 months, renting short term made a ton of sense because then when I found the home that I liked, it's more of an emotional thing. It's not really an asset where you're like, hey, I'm going to cash flow. It's an asset where I felt comfortable buying. I love the neighborhood. The appreciation has been amazing for the last 2 years. If I had rented for the last 2 years, I would have lost about $400,000 or $500,000 of equity buildup because it's been gone crazy down here.
I think if you were just holding that money in cash, right? That's the importance of it. It's a slight hedge against inflation, even with a single family residence. Yes, there's the expenses and everything go, and you can have that argument. But ultimately, you're seeing this crazy inflation, and the home values are following. So it's at least it's somewhat hedging against the inflation that we're seeing because your property value is increasing, right?
Yeah, Jake. So let me give a couple examples of, we're talking about owning versus renting, and it's very similar to what we do with the 100-year mindset and the 100-year real estate investor. Term insurance, versus whole life. When you're really young, you need some type of protection. When you're young and you can't afford a down payment on a home, or you're transient, you're going from one market to the next, renting may make sense for you. Buying term insurance just to cover the protection may make sense for you. So think about it that way. But as you get older, you want that living benefit and that death benefit. As you get older, you do want to buy a home in a good area. And don't think of about it 1, 2, 3, 4, 5 years. Think about it in decades. The average homeowner, the problem is the average homeowner only stays in their home for between 5 to 8 years. So if you don't time the market right, you may be in trouble. But if you buy that home for the long term, you're going to be okay. Our baby boomer parents bought homes in the 70s and 80s for $22,000, $34,000. They just sat there, paid down their
That's their net
$150 a
worth.
month mortgage, and actually inflation took over, and that $22,000 home today is worth $500,000. Very similar to what we're talking about with whole life. But the better thing with whole life is living benefit, death benefit. You can tap into that cash value. As a 100-year real estate investor, you can borrow that cash value, go out and buy another asset. As you're buying that asset, you're collecting cash flow from the asset. You're paying back the policy loan. So when that policy loan is paid off, guess what? You own two assets. That's the power of it. And I think the other thing, Jake, we haven't even touched about mindset. There's a different mindset when you're a renter versus you're an owner. I own this house now. I have pride of ownership. I'm going to take care of it. I am a steward of this home. Big difference. That's the 100-year mindset. You have responsibility. You're responsible for this asset. You're going to take care of it. You're going to make sure you're going to get the most out of it. You have pride of ownership. This is my home. Whereas when I was renting, you know what? That doorknob is loose. I got to fix the light bulb. Let it go. And it's the truth, isn't it? I mean, like,
Can't wait to get out of this place so they can worry about this shit, right?
Yes. Big difference. And it's the same thing. I think when you're doing the term versus whole, you're paying that premium every year, whole life. It feels like an expense in the beginning. You're forced to save. But man, after 10 years, you look at that statement and go, I've built up a significant amount of cash value. It's mine. I'm not renting it. I'm not giving it back. I'm not, 99% of all term policies, they expire, done. And then when you go up to re-up and you're 50 years old or 55, you, number one, may not be insurable. And number two, guess what? Those premiums have just shot up tremendously because you're a lot older. So this is all comes down to mindset. What you need to do for your personal financial engineering and what you want to accomplish. For Jake and myself, we want to buy appreciating assets. We want to accumulate as many assets as possible. And as in the honeybee, we want to buy complementary streams of revenue. That whole life is amazing for us because we're borrowing from that whole life. We have stability. We have cash management. We have guaranteed returns. We're not taking any risk on that money. We're pulling that money out and going out and buying another asset with that money.
It's so powerful because you let the data speak for itself. You see the vast difference in the majority of people that, in terms of net worth, who own a home versus rent. Okay, tremendous difference in net worth. And then if you look at it, we're talking about insurance now. If you rent, which Gino is referring to, term insurance versus buying, it's the same type of concept because you rent the term insurance, essentially it expires and you're left with nothing. You buy the whole life insurance long term, there's going to be a death benefit at the back end to benefit your heirs, whoever you want that money to go to. And the way that I'm using it is for trusts to make something that's, going forward for multi-generational use. That's my goal. So it's a buy versus rent mentality. Okay. And in the time that you buy this policy, this whole life policy, you can repurpose it. We call it the dual asset strategy to buy more assets. So you have the back end death benefit while you're still using the cash to grow your real estate portfolio. And gang, this is simple. This is personal financial engineering at its finest. That's what we're talking about. And ultimately for us, because we're talking like this is how we use this stuff, this is a legacy play. Okay. We're building up generational wealth in an attempt to, impact future generations. And that's why it's so important to us.
Jake, do you mind if I go back to the owning versus renting a home analogy real quick?
Found it.
For me, I struggled, buying my home because I understood, wow, in the short term, I'm going to have to replace the air conditioner. The pool back there, I got to get the pool pump going on. I got to do the roof. The roof is 40 G's. And that's short-term mentality because I'm going to take a hit in year 1, year 2, year 3. Renting a home, probably paid $4,000 a month down here, done. But at the end of the year, it's $50,000. That's poof, it's gone forever. If I replace these assets in the home, I'm going to continue to own the home. And it really comes down to everybody. Check your short-term mindset versus your long-term mindset. In the short term, probably makes absolutely no sense to buy a home in the very short term. It makes no sense because you're taking a risk. You don't know where the market's going to go. You don't know how much
There's
of
so
your
many
money.
more things to weigh in that though, because it's like time spent with your family, it's
Yes.
safety, security. There's so much more that goes into it
Yes.
that we're not even touching on. But I hear
Oh,
you.
absolutely.
Financially,
Yeah, no, what I'm saying, in the very short term, it would make, it's the same thing with whole life. In the very short term, it makes no financial sense.
Yep.
But we are 100-year real estate investors. We're not looking for today or tomorrow or next year. We are looking decades out. And that may be the hard challenge. That's why, when people retire, only about 4% of people who retire are wealthy, are financially stable, don't need Social Security. What are the other 96% doing? They're probably buying term and they're probably renting. They don't have that stability. So for me, when you're buying a home, let me give you a couple of tips. When you're out there and you're looking to buy a home, don't think of the short-term pain. Don't think of all the things you need to replace. If you're going to be in that home for 5, 6, 10, 15 years, building those memories with your family, then it's worth the rent. But if you're there and you're like, you know what, I need a place to live, I'm going to take a short-term decision and I may be out in 2 years, there's going to be an inordinate amount of risk on there because you never want to time the market. Go back and listen to our podcast that we did with Dr. Peter Linneman. He talks about investing in decades. We're not here to time the market. You never know what's going to happen with the market. If you're trying to buy low and sell high, that is very difficult to do. So when you're buying a home, think about you're buying an asset. You're going to enjoy the asset. Like Jake said, it's pride of ownership. You're going to get equity principal pay down. You're paying down the mortgage. So as the house appreciates, your mortgage gets a lot smaller and smaller and smaller. Let's talk about that as well. The power of that. There are so many benefits to it, but it has to be fit your financial model.
I think the most important thing that I took away from this conversation today is that you can do what Gino does, who is in the top 1% of, net worth, whatever you want to say, in the country, in the world. Or you can have a short-term instant gratification mindset. And that's really what we're talking about. This is a mindset play. It's instant gratification versus long-term sound personal financial engineering. And I think it's as simple as that. Hit me with the B, baby.
I got the B here. Hit me up, everybody. Gino, jakeandgino.com. I will send you a PDF copy. There's so many golden nuggets in here. And, the story of Noah, he starts out as a W-2 and he transforms himself into a business owner with multiple streams of revenue. A lot of learning lessons in here. If Noah had some whole life over here, he could have used his whole life to buy a couple of apartments, but he didn't know. He was a W-2. He was doing what everyone else did.
Stay out of busters, right?
Yes. No 401k for Noah. Noah didn't have a 401k. He had to blow the 401k up. Have control of your money. Jake, where can they get more information on the 100-year?
100year.com. Best website we own. Simple. We keep it simple. Gino, thanks for your time today.
Love it, Jake. Take care, everybody.